Hi guys, let's analyze Quickheal technologies. So what's happening here? Trend is up. This was, you can clearly see 50, 200. This stock has gapped up from the 50-day moving average. The gap was significant. The gap was around, say, 10%. It closed at 20%. So I have been monitoring this stock. I was hoping that it probably comes down a little over here or something so that I could buy it, but I didn't get a chance. So I'll wait for it to consolidate here. Looks like it's consolidating over here. Wait for it to consolidate here and then probably take a position. So on the weekly, it looks very good, up on high volume and then consolidation and then broke out again. It's pretty far off from its all-time high, which is around 400, uh, you know, 400 rupees or so. What else? Uh, See, if you see the stock was consolidating here and it broke down, so possibly uh, some sort of supply may come in from here. Okay, so that's that. So what am I looking to do? Two things. One is I would wait for 50 to catch up with price and 21 EMA to catch up with price and then wait for it to consolidate further and then buy. Or if it just sort of pops down on any given day, it could happen, sort of comes down here till here or somewhere. So my orders are placed around 210, 212, you know. So, if the order gets executed, I will see how the price is moving and I will start buying. In the meantime, this 21 EMA will catch up with the price and that will give us more clarity on how we can play this. So currently, this is pretty far away from the 200, and it's pretty far away from the 52. So I'm not very keen on buying it right now. Also, I'm 95. I'm 100% invested. I have a few positions which are not working out for me. So I've bought Infosys, I've bought TCS. It's not been doing that great. So I want to get out of these stocks. They are very large cap companies and possibly buy some small cap IT or pharma names, because that will give me better returns in the short term. So that's the technical part. Let's look at the stock quickly. It's a small cap and uh, see on the promoters are holding good number of shares, so that's a good thing. Cash flow is good. Okay. Uh, Absolutely no borrowing. They have around 400 crores of investments. So that is the amount of cash they have on the books. Okay, what else? Let's check the corporate action. They did a buyback of 154 crores. So that's also a very good thing, which means they did a buyback of around 10% of the total market cap, which is extremely, extremely good. Profits have risen, as compared to last year. It's like all-time profit, all-time high profits, all-time high sales. Sales have not gone up as much. If you see, sales are only up 10% in the past 6, 7 years. So sales has not gone up much, but their margins have basically become better, and due to that, their profits have become better. Quarter on quarter, sales have gone higher, profits have gone higher, so that's a good thing. So overall, it looks good. Balance sheet is good. Profit and loss statement is good. So just waiting for it to consolidate here and then take a position, um, and see how it plays out post that. There was a big consolidation here. If you see, there's a big consolidation here. This consolidated since October to March. But what happened here, if you see on the daily, it just didn't give you any opportunity to buy. It just sort of popped up, and then it came down, uh, and then it was trading sideways, and then again there was a gap up. So the the pullback was not significant. It just pulled back to the 50. I was hoping that it sort of consolidated a little bit here, but it just pulled back on this. There are a lot of gaps, so you have to be careful. As in, it becomes difficult to make an assessment, gap up, gap down. So you've got to play it differently. You can't play it the same way. You see, it gapped up, it gapped down, then it gapped down, and suddenly it gapped up. Um, obviously, this must have happened because of earnings. So we'll wait for a consolidation, and then we can buy it for another leg on the upside. So let's look at the monthly chart quickly. It's going up. That's a good sign. Down. Volume is very low. This is the area that probably we can see like it may stall, and then it can go further. So what we can expect it to reach 300, 350, somewhere around the all-time high levels. We can expect it to reach those kind of levels. That is something that we can expect. So what kind of, if we buy at 240, let's say two, we can expect at least 50-60% returns in this stock. Obviously, it's not going to come overnight, so we'll have to keep it for 2, 3 months, 4 months at least. Yeah, thanks, guys.